Yes, students. Now we will get into the third part of this chapter, which is reconciliation of profits. Reconciliation of profits will come only when we are maintaining the books under non-integrated accounting system. Because here we are maintaining two separate set of books. One book is for recording financial transaction. Another book is for recording costing transaction. So that means this will lead to what's two different profit figure, and obviously this two profit figure will not be same, so we need to reconcile. First tell us why these two profits will not be same, sir. What is the reason, sir? Guys, first we have to go and eat the objective of these two books. The objective of costing records or costing books is to find out the profit or loss made from the production and sale of a product or a service. Here, if there is any revenue which is not from a product, we will not record it. If there is any cost or expenses which is not related to the product, we will not record it. Yes, no. Now coming to the financial books. If there is any income, okay, first of all, what is the objective of financial books or financial records? Guys, to calculate the profit of a company as a whole, not from a product or service, for a company as a whole. Yes, sir. So in this process, do they record the revenue other than from the product also? Yes, like rent received, dividend received, interest received, or income, profit on sale of assets. All this would be recorded here. Yes, sir. And also coming to the expenses. So in financial books, we record all the expenses relating to the company as a whole, not only related to the product. Whatever is related to the product, for sure we will record it, no doubt in that. But in addition to that, company would have incurred some more expenditure. What is it, sir? Maybe the share issue expenses, discount on issue of shares, debentures, or premium on redemption. All this over a period of time they will write out of. Even if it is a premium, they will write it off to P&L account. Yes, over a period of time. Yes. Then coming to interest paid, dividend paid, company can pay that also. Assume they have taken the debt, they will pay interest. They have invested in someone else's shares, they get dividend. Yes, they can pay also, they can receive also. Clear? You guys know, na? There is a difference between in cash flow statement. There is a difference between investing activity and financing activity. Financing activities, how do you raise the finance? How do you raise the capital? On that, anything you pay is a financing activity. Investing activity, sir, I had some surplus money, I have invested it, or I have purchased my fixed assets. All these are investing. I had some surplus money, I have invested in the shares of some other company. I have invested in bonds, debts. I get dividend, I get interest. What is it called? Investing activity or financing activity? Investing activity. Interest dividend received is an investing activity, whereas interest dividend paid is a financing activity. You know, right? Yes. So for a company, can it be both, sir? Paid as well as received? Yes. It can be both. Okay. Yes. So then coming to any other expenses like goodwill written off, preliminary expenses written off, we will record only in the financial books. Hey, ಯಾಕೋ ನಿಂದು ಕಟ್ ಮಾಡ್ಬೇಕಾ? ಹಾ, ಚಲೋ. Now, so in financial books, we will also record all these expenses. We call it as pure financial charges. Pure financial expenses. Whatever example previously I gave, rent received, dividend received. Hey, last bench, pay attention here. Come to the corner, Rohit. Corner. Ah, chill. Now, interest paid, sorry, interest received, dividend received, rent received, all these are pure financial incomes, which we record only in financial books. Clear? Likewise, this is from financial point of view. Likewise, from costing point of view, there are some notional expenses which we record only in costing books. Clear? It is not an expenses. We have not paid it, but just to calculate my total cost. Can I consider it, sir? Yes. Just to know your total cost, you can consider it. So, is there any restriction on considering the notional expenses in costing? No, there is no restriction as such. Whereas in financial books, can we record notional rent? No, you cannot record any notional expenses like notional rent, notional salary. You cannot record it in financial books. You would have never observed that in your accounts. Yes, sir. Even this will lead to difference. Yes. Then valuation. I told you valuation of inventory. Clear, sir. In one method I am following in financial books, another method I am following in cost books. Can it happen? Yes. Obviously, different methods will lead to what difference in amounts. Then coming to depreciation amount also. Sir, I am following SLM method in assume financial and WDV method in costing. It will lead to difference. Yes, sir. These are the two common methods. There are many other methods also. Okay, but these are the two which is commonly followed. Clear? So I am following two different methods in two different books. This will also lead to difference? Yes. So once I close my books of accounts, guys, once I close my books of accounts at the end of the year, sir, there would be difference in profit. As per my costing books, the profit is, assume I have closed my books, as per my costing books, the profit is 1.5 lakh. 1.5 lakh. As per my financial books, it is 2.2 lakh. Now I need to identify what is the reason for it and prepare a reconciliation statement. Guys, I will not do any alteration for these records. I will not do any crossing or change the amounts. Sir, I have committed some mistake. I will rectify it here. No, no. In reconciliation, our job is not to rectify the books, even if the mistake is done. What do? We will show what is the items which are leading to the differences in profit. Where do we show? We will prepare a separate reconciliation statement. We'll prepare a separate reconciliation statement. So when we are doing reconciliation, guys, we are not doing anything in books of accounts. Books of accounts is already closed. We already have some profits. Now we are trying to tally it. Now we are trying to tally it. And please remember, when we are preparing reconciliation statement, it is over and above all these books of accounts. Okay. And we will take any one profit as a base. Any profit, one profit as a base, either costing profit or financial profit. Now assume, guys, I am taking financial profit as a base. Then what I do is, any adjustments I will do it to the financial profit. Any adjustments I will do it to the financial profit. Clear? Means they would have given some reasons for differences. Now because of this, my financial profit has increased or decreased. Now assume because of this item, my financial profit has already gone up. What will I do? Bring it down, deduct. Okay. Now, sir, because of this item, my financial profit has gone down, sir. It has decreased. What will I do now? Add it up. Add it up. Now, one more thing. Sir, in costing books, there is some mistake committed, sir. Because of that, profit has changed, sir, in costing books. What do I do? In financial also. Now, in reconciliation statement, adjust that mistake. Clear? Now, I cannot go and correct the mistake in costing books. Where are we now? In reconciliation. Now, if that mistake happens in financial books also, what will be the profit? Give that treatment. Give that treatment. Hope you guys are understanding. Means whatever profit you take as a base, any adjustment I can make to that base, not to the other one. Not to the other one, guys. Assume I started with financial profit. There was some mistake committed in costing profit, because of which costing profit has gone up. What do? Add to financial profit also. Sir, there was a mistake committed in costing books. They have under recorded, over recorded, something has happened, because of which costing profit has come down. Now what do? Your starting base is financial profit. What do? Bring it in. You deduct. Clear? Because now my starting point is financial. Any adjustment I can make is for financial profit and not for costing profit. And not for costing profit. Hope you guys got it. Clear? So we'll learn some basics. Then I will also explain the adjustments, guys. What are we supposed to add? What are we supposed to deduct? Nothing to mug up. Sir, will you give the list of the items which you have to add? List of the items which you have to deduct? No, no, no. You cannot remember all like that. Clear? So how do we decide whether to add an item or deduct item? Only two adjustments here. Simplest two. Sir, are they asking the questions on this? Yes, they're asking questions on it. And especially those who are from foundation route. Even if you are from a degree route, you have done a BRS na, you're already expert in it. BRS are +1 +2 lo ಮಾಡಿದೀವಿ. Foundation allu we did it. And also we did it in degree. Okay, in 1 or 2 semester accounts will be there. For sure, at least in 1 semester, BRS would have been covered. Yes, sir. So you would have already been expert in that. Same knowledge we will carry. Same knowledge we will carry here. There we used to reconcile passbook balance with what? Cash book balance. Here we will reconcile financial profit with costing profit. Ashte. Profit reconciliation. Balance cash book, passbook we are done with. Now let us do profits. First let us understand some basics, guys. Then I will come and explain the concept of why do we add to why do we need to add something, or why do we need to deduct something. So let us see what is given in my concept book. Come to the concept book. Let us start, guys. Reconciliation of cost and financial profits under non-integrated accounting system. First one. Sir, why there is a need to reconcile? Sir, why should we reconcile? We will understand how to do reconciliation later. First, why? Financial accounts are concerned with ascertainment of profit or loss for the whole operation of a organization. They want to calculate the profit or loss for the whole operation of the organization for a relatively longer period, usually a year, without being too much concerned with cost computation. Whereas cost accounts are provided for ascertaining the profit or loss made by manufacturing a product or a service for cost comparison and preparation and use of variety of statements. Clear? So we understood these are two different objectives. What is the objective of financial records? To calculate the profit or loss of an entity as a whole, So they will consider not only the revenue from the product but also others. Clear? You guys would have seen even in your financial statements, revenue from operations will be there. Then other income. Other income, both you will record. Yes. Whereas in costing, sir, we record only the revenue of a product and the expenses relating to the product. That means our objective is to find out profit or loss made on the production and sale of a product or rendering of a service. The difference in purpose and approach in cost accounts lead to difference in profit from what is disclosed by the financial accounts, and this establishes the need for a reconciliation of profit between cost accounts and financial accounts, guys. What are the causes for the difference? Means what is the reasons for the differences? The vital differences between the two branches of accounting under non-integrated accounting system are manifested in the variation of the profit, that is the difference in profit, figure of one from the other through the cumulative impact of following factors. What are those? First item shown only in financial accounts. We never record this in costing books. We record only in financial books. What are those? There are certain items which are included in financial accounts but find no place in cost accounts. The items may be classified as under. Under the two subheading, guys, pure financial charges means what? Financial expenses recorded only in financial books. Clear, guys? Due to this, come on. Okay, first let me read the list. Pure financial charges: loss on sale of fixed assets and investments, expenses and discount on issue of shares or debenture, interest on bank loan, mortgages, debentures, etc., damages payable, penalties and fines. See, if it is a penalty fine relating to material, I would have recorded in costing P&L account directly, abnormal items. But if it is a penalties relating to some other things, for example, sir, penalty for GST return late filing, okay, or penalty for delay in payment of GST, those things will be recorded here? No. Clear? Or as for any other purpose, not relating to the product. Not relating to the product. If you have paid any penalty, you will record only in financial books. Goodwill written off, preliminary expenses written off, income tax, donations, subscription, dividend paid or proposed, transfer to reserves and sinking fund. Clear? Guys, if I have to tell, even there was something called as P&L appropriation account for you. Okay, so in P&L appropriation account, what you used to do? Sir, in P&L account, we will find out net profit, sir. Whatever net profit is after all the business related expenses, sir. Now we will transfer net profit to P&L appropriation, sir. Assume we have a net profit of 10 lakh. What do you do with this? Sir, 2 lakh we are distributing as a dividend. Record it. Sir, 8 lakh we are transferring to reserve, sir. You will record it. Correct. That means what do you do with 10 lakh? You will transfer it to the respective accounts. Proposed dividend. Transfer to so and so reserve. Clear? Now what you will do with 10 lakh is left to you. Board of directors will decide it. Clear? Yes, sir. So anything which you take care in P&L appropriation account also will be recorded only in financial books, guys. Will be recorded only in financial books. Even if you have observed in income tax, PGBP head you would have learned this. Okay, that is all these items, most of them are disallowed. Especially whatever you record in P&L appropriation account, disallowed. Transfer to reserves, any reserves, proposed dividend, whether it is equity or preference, disallowed. Why, sir? Simple logic being, even taxation you may record in P&L appropriation only. Sir, is it disallowed? Yes. Why? Income tax is telling simple thing. You have earned a profit of 10 lakh. Pay tax on it and do whatever you want. You declare dividend, you transfer it to reserve, that is left to you. Pay tax and do whatever you want. Even in income tax, whatever you record in P&L appropriation account is disallowed expenditure, guys. Is disallowed expenditure. So coming to this, sir, these are the expenses which we will record only in financial books. Because of this, my financial profit, guys, financial profit will come down or go up? Come down. Whereas my costing profit will be same because I have not recorded. No? It will be same. Because of these items, I am telling you. Because of these items, only financial profit will come down. Okay, if you want, you can write like this. Costing profit would be same. Costing profit would be same. FP stands for financial profit. CP stands for costing profit. Okay. Now, goodwill, dividend paid propose. Sir, what is that propose? Who will propose to whom? Huh? Hey, Rohit Sharma. Who will propose to whom? ಅವನ್ಗೆ ಯಾಕೆ ನೋಡ್ತೀಯಾ ನೀನ್ ಹೇಳು ನಿನ್ ಚಾಯ್ಸ್ ಹೇಳು dividend who will propose to whom board of directors to shareholders board sir starting problem sir ನೀವು ಹೇಳಿದ್ರೆ ನಾವು ಕಂಟಿನ್ಯೂ ಮಾಡ್ತೀವಿ ಹಾ board of directors will propose the dividend to the shareholders so shareholders will approve it in annual general meeting guys correct yes sir next coming to pure financial income these are the incomes recorded only in financial books rent receivable interest received on bank deposits profit made on sale of investment fixed assets etc transfer fee received interest dividend etc received on investment brokerage received discount commission etc received discount can also be expenses also it can be income also sorry because discount received is there discount allowed is there if discount allowed means it will come under pure financial charges discount received means it will come under pure financial income guys if the discount allowed discount received with respect to the product we would have recorded in cost records sir what if it is something else not related to the product normally discount received discount allowed will come only with respect to the product but if at all but if at all if it is not related to the product then we will record only in there which books financial books for example discount on the discounting of bills discount on discounting of the bills will we record in costing books no assume I had a bill of face value 1 lakh I had a maturity period of 3 months I couldn't wait and I cannot control I want the money immediately so I went and discounted the bill will I get full 1 lakh? No. Assume I got only 90,000. Remaining 10,000 is what? Discount charges. Is that a loss for me? Yes. We will record only in financial books. We will record only in financial books. Okay, sir. Sure. Now, because of this, what will be the effect on books or profits? Financial profit will go up, guys. Whereas costing profit will be same, constant. Financial profit will go up, whereas costing profit will be constant. Financial profit will go up and costing profit will remain same, constant. Okay. Next, items included only in cost accounts. Only in cost accounts. There are certain items which are excluded from financial accounts but are included in cost accounts only. Most of them are notional, guys. Most of them are what? Notional. For example, assume guys, I am working for my own business, not drawing any salary. Not drawing any salary. But if I am working elsewhere, sir, I may get a salary of 1 lakh rupees per month. 1 lakh rupees per month. Can I consider it as notional salary for my business? Yes. Clear. For me, it is an opportunity cost. For business, it can be considered as notional salary. Same way, sir, we are carrying on the business in my own building. I am carrying on the business in my own building. We are not charging any rent for the business. But if this building is let out to someone else, we will get a rent? Yes, sir. Can we consider it as notional rent? Yes. Next, guys, please be careful. Opportunities from my side. Whereas from company side, it would be notional. One and the same. One and the same. But standing in two different shoes. Yeah, one is in my shoe, one is in company shoes. Okay. Next. Assume investment. I have invested in my business 5 lakh rupees. I am not drawing any interest on it. I am the shareholder. I am the owner. I want to grow the business. If I had invested elsewhere, at least some minimum return, 7-8% I would have got. Yes, so 7-8% at least return I would have got. Then what do we call this as? Notional interest. Notional interest. Can the company consider it to calculate the cost? Yes. Where? Only in cost books. Only in cost books, guys. Sure. There are certain items which are excluded from financial accounts but are included in cost accounts. First one, interest on capital employed in production but upon which no interest is actually paid. No interest is paid, but can we consider notional? Yes. It is included in cost books in order to show the nominal, that is notional cost of employing the capital rather than investing it outside the business. Charge in lieu of rent where premises are owned. So, property is owned by the owner only. He is not charging any rent. Can we still consider it as notional rent? Yes. Clear. We can think from 2 points of view, guys. Now, sir, if this building is let out to someone else, what is the rent we would have got? What is the rent we would have got? Or else, sir, whatever same building is there, na, if I had taken from someone else, what is the rent I would have paid? I would have paid. You can consider that as notional. Charge in lieu of rent where premises are owned, that is notional. Then depreciation on asset, even when the book value of the asset is reduced to negligible figure. Guys, normally when the book value of the asset comes to zero, we will stop charging depreciation under financial books. Whereas in costing, sir, I'm still using it, sir. Almost asset value is zero, sir. Can we still charge depreciation? Yes, they keep charging it. They keep charging it. You are using a, yes, charge some depreciation. Like that. Okay. Maybe, sir, in that case, asset value you told it is nearer to zero. What do they charge? They will calculate some random amount, okay, based on usage and all, and they can charge it. But this cannot happen in financial books. Salary of the proprietor, where he works but does not charge salary. In bracket, you can write notional salary. Notional salary. Then over or under absorption of overheads. This concept is there only in financial cost books. We never have something called as under absorption or over absorption in financial books. Why, sir? Financial books we always prepare at the end of the year. No predetermined rate, nothing. Clear? Yes. Whereas in costing, if I am following predetermined overhead rate to observe the overheads, then will it lead to under absorption or over absorption? Yes. Due to this, will the profit change? Yes. It will have an impact. Then abnormal gains and losses only in costing. Clear? Whereas in financial, we never bother about what is abnormal and all. Loss are just recorded. Clear? But here we have a separate treatment for normal loss, abnormal loss. For actually normal loss, we don't do anything. We just reduce it from the units. We just reduce it from the units. So automatically the cost of good units will go. Fine, guys. And due to this, most of them are the expenses only. Due to this, what happens? Costing profit will come down, whereas financial profit will be same. Same. Okay. Due to this, costing profit will come down, whereas financial profit will be same, guys. Financial profit would be same. But please be careful, for under or over absorption, it can change. Even for abnormal gain and losses, it can be either way. It can be either way. Clear? For example, if it is a gain, then costing profit will go up. Clear? So then even if it is under absorption, profit would have gone up. Correct? Yes. So for this two, especially the last two, it can be either way, both increase or decrease. It can be increase or decrease. If you want, you can write like this. CP can be down or CP can be up. Both. Then the last two items. Adoption of different basis of valuation of stock. Different methods of charging depreciation. I already explained about it, guys. So this can be asked as a theory question also. This can be asked as a theory question. Whatever we just now discussed, explain the reasons or causes for differences in profit. Oh. Procedure for reconciliation. Procedure for reconciliation. Procedure for reconciliation. There are 3 steps involved in procedure for reconciliation. What are those, sir? One by one. First one, ascertainment of profit as per financial accounts. As per financial accounts. Ascertainment of profit as per cost accounts. As per cost accounts. Then reconciliation of both the profits. Guys, what we are dealing with only this one. Now, But can they ask question on all three, sir? Yes, they're asking. Clear. Again, under reconciliation, there can be two category of question. One is directly hitting only reconciliation. They will give you what is financial profit or costing profit, or they may give both. Either of the two they will give, or both they will give. If they give only one profit, that should be your starting point. Sir, what if they give both? You can decide. You can decide what can be your starting point. Okay. You need to just do the reconciliation. And in the question itself, they would have given the int. What is the reason for the differences in profit? Some adjustments and all. Okay. Or the second category of question, last page. Second category of question is they will ask you to prepare all. First find out financial profit, first then find out costing profit and tell why there is a difference. And tell why there is a difference. And for such kind of question, obviously marks weightage would be more. Marks weightage would be more. We will solve all kind of questions. Don't worry. All kind of question. We will solve exclusive question only on reconciliation, and we will also solve a question on all three. On three steps. Okay, sir. Just a minute. Yeah. So as I told you guys, there can be one question asking all three, or one question only on third step, where only reconciliation is asked. Okay. Circumstances where reconciliation statement can be avoided. When can you avoid it? If it is integrated. Okay, no sir, I don't want to prepare reconciliation, extra work or extra time and all. Then go with what? Integrated. When the cost and financial accounts are integrated, there is no need to have a separate reconciliation statement. Integration means that the same set of accounts fulfill the requirement of both, that is costing as well as financial accounts. Costing as well as financial accounts, guys. Yes, this is all about the topic. Now coming to preparation. Now coming to the preparation. Guys, there are two ways to reconcile the profit. One is through memorandum reconciliation account, and the other one is through statement. Through statement. Let us first discuss the statement. Reconciliation statement. When there is a difference between the profits disclosed by cost accounts and financial accounts, the following step shall be taken to prepare reconciliation statement. What are those, sir? Profit as per either of the books, you take it as a starting point. Clear? That is your choice. If they have given both the profits in the question, it is your choice. Clear? Or sometimes they may give both and ask you to start with financial profit. Please start with financial profit. Or they ask you to start with costing profit. Start with costing profit. No, sir, they have not mentioned anything like that. Choice is yours. Clear? Okay. If not, sometimes they may give only one profit and ask you to find out another profit. That means you need to start with whatever they are given. You need to start with whatever they are given, guys. Okay, fine. So, once you take any profit as a base, either cost profit or financial profit, you have to decide what all has to be added, what all has to be deducted, guys. And then at the end, you will get profit as per the other. Profit as per the other. Don't worry about the loss. Loss and all I will take care later. What if it is a loss and all? Loss I will take care later. Okay, sir. Now, listen. Sir, you are given so many items to add and deduct. Will everything comes in the exam? No, I have given what is maximum. What can be maximum be there, guys. Okay. So if we are taking costing profit as a base, we need to add all these items, guys, and deduct all these items. If by chance, if I'm starting with financial profit, if I'm starting with financial profit, then whatever I have deducted here will be adding it. Clear? Same way, whatever I have added, I would be deducting it. Sir, are you teaching like this? No. I will teach you the way why you should have or why you should deduct later. Okay, I'm just explaining you the format as of now. Why to add something, why to deduct something, we will take care of. We will take care of. Hope you understood. Yes. Guys, if it is a loss, what you do is simple. Decide it whether to add or deduct from profit point of view. Okay, because of this item, my profit has increased or decreased. And accordingly, decide whether to add it or deduct. Never analyze from loss point of view. It will confuse you. It will confuse you. Analyze from profit point of view. Means because of this item, my so and so profit, whichever you have taken as a starting point, even though it is a loss, you still analyze from profit point of view. This profit has gone up or gone down. Decide whether to add it or deduct. Do the same adjustment. Only difference is, if loss is a starting point, put it in a bracket. Must. You just put it in a bracket. Whatever has to be added, add. Whatever is to be deducted, deduct. Okay, now because the BRS and all, I don't know how you guys would have learned. Because there, sir, if you are starting with negative balance, unfavorable balance and all, you would have learned it in a different way, how to add, deduct and all. But I don't care about it. But now, if your starting point is loss, just put it in bracket. While analyzing whether to add or deduct, please analyze as if it is a profit. As if it is a profit. So because of this, my profit has gone up or gone down. Should you decide whether to add it or deduct? Whatever has to be added, add it. Whatever has to be deducted, deduct only. No need to change anything. Only thing is what? Start with negative. Stay. Start with negative. At the end also, if you get negative, it is a loss as per the other. No, sir, we got positive, sir. That means it is a profit as per the other guys. Very, very simple. Is that clear? Yes. We'll solve the question. We'll solve the question. I'm just explaining the format. Don't worry. Because in the questions we'll encounter everything. Profit or loss, everything is there. Now coming to, sir, what about memorandum reconciliation account, sir? Guys, simple here. Whatever there we will do it as a statement. Na? Here we are doing it as a account. But here don't follow double entry system and all. Just to take with this, just decide what to take on credit side, what to take on debit side. Simple. Now assume you are starting with costing profit. You analyze each and every item. Whatever has to be added, bring it on the credit side. Whatever has to be deducted, bring it on the debit side. Ashte. At the end, you will get profit on the other side. Because if credit side is more, you will get profit on the other side. Sir, what if by chance debit side is more? Then you will get loss on the other side. You will get the loss on the other side, guys. Hope you understood. Same like statement. Same like statement. You start with one profit on the credit side. Whatever has to be added, credit it. Whatever has to be deducted, debit it. At the end, you will get the profit. Normally, if you start with profit, credit side would be more. Check the debit side balancing figure. That would be the profit as per the other. Clear? Now, sir, what if loss is the starting point? Simple. Whatever has to be on the credit side, let it be on credit side. Whatever has to be on the debit side, let it be on the debit side. But loss will come here. Starting point will be loss, to loss as per so and so. Clear? Sir, should we interchange these adjustments? No, don't do interchange. Clear? Whatever has to be added from profit point of view, not from loss point of view. You will always analyze from what point of view? Profit point of view. Whatever has to be added, put it on the credit side. Whatever has to be deducted, put it on the debit side. Aste. But as it is a loss, we will start from debit side. Okay, now so this profit will become loss, but this will come on the debit side. First item. Don't put it at the end. Okay. Now at the end, check which side is more. Normally, when you have started with loss, debit side would be more, guys. So debit side would be more. The balancing figure would be coming here. As what? Loss as per the other. Sir, what? I started with loss, sir. But credit side is more, sir. No problem. You will end also with debit side only. To profit as per the other. Clear? Maybe one book loss, one book profit. It can be there. Okay, that is where students normally get confused. Okay, now don't worry. See, at the end, just check the total on both the sides. Normally, I'm telling you, when you start with loss, debit side will be more. So you will write the balancing figure on the credit side. Clear? Same way, if you start with profit, normally credit side would be more. You will write profit on the other side as per the other. As per the other. But in a very rare scenario, it can be opposite also. Clear? For example, I started with credit balancer, but ended up being debit side more. Debit side more. In that case, you will end with what? Loss as per other book as balancing figure. Hope you guys got it. Yeah, let me read it. Preparation of reconciliation statement of memorandum reconciliation account. A reconciliation statement or memorandum reconciliation account should be drawn up for reconciling profits shown by two set of books. Results shown by any set of books may be taken as the base and necessary adjustments should be made. Necessary adjustments are plus or minus should be made to arrive at the result shown by other set of books. Reconciliation can also be done by preparing what? Memorandum reconciliation account. This account is a memorandum account only and does not form part of double entry system. Here we are not opening this to close any account. We are just opening this account to reconcile. Clear? Because any account we open normally ledger accounts, we will close it one or the other day. Correct? Now don't go with that notion. Sorry, if I have debited here, where will I credit? In which account will I credit? That things will not come here. Clear? Yes. A specimen form of memorandum reconciliation account is given below. Clear? Now, note, if profit as per year, my starting point is costing profit tax. So, whatever we have added will come on the credit side, and here this will come on the debit side. Okay. If profit as per financial accounts is taken as a base, then the items credited above shall be debited and the items to be debited shall be credited. The procedure will reverse. That means if this is the financial books or financial accounts, then whatever is on this side will go to the credit side, and whatever is on the credit side will go to the debit side because reverse effect. Because reverse effect. Clear? Yes. This is all about the reconciliation, guys. Now, I will explain each of this item with an example. Please pay attention. This is important because now I want you guys to understand what to add, what to deduct. Why are we adding something? Why are we deducting something? Please pay attention. Guys, let me imagine financial records, costing records are already closed. Financial profit is, assume, 1,50,000. 1,50,000 and costing profit is 2 lakh. And there are number of items for which there is a difference here. Clear? Now we will see item by item, one by one. So, if I am starting with financial profit as a reconciliation, what is my financial profit? 1,50,000. If I am starting with costing profit, 2 lakh. Okay, or else I will, fine, sure. I will start like this. Financial records. We'll go item by item. Guys, this 50,000 difference will not be due to only one item. It will be for number of items. But I will just explain one by one as an item by item individually. Oh, now assume guys there is one revenue, financial income recorded only in financial books. Recorded only in financial books. How much, sir? 20,000. Have we recorded this in costing books? No, we have not recorded it. Because of that, my financial profit has gone up. Yes, by how much? 20,000. Now, if this item would have not been there, my financial profit would have been 130. 1,30,000. You don't think that, sir, again difference will increase. We have number of items. One of the item I am discussing now. Clear? Yes. So because of this item, my financial profit has gone up, guys. Financial profit has gone up, whereas my costing profit is same. It is same, constant, because we are not recorded any cost books. Come on, guys. Come on, guys. Now, if I am starting with financial books profit, if I am starting with financial profit, so now let me assume this as financial profit, this as costing profit. My financial profit has already gone up by 20,000, whereas my costing profit is same, and my financial profit is my starting point. If I have to make any adjustment, I have to make it for what? Financial profit. If I have to match it with the costing profit, what should I do? Bring it down. That means what? Deduct. Deduct 20,000. Deduct 20,000. Hope you understood. Yes, sir. Same way. Now reverse effect. Sir, I am starting with costing profit. Financial profit has already gone up, whereas my costing profit is same, sir. Now, my starting point is costing profit. Any adjustment I can make is for which profit? Costing profit. If I have to match it with my financial profit, what should I do? Add it. Add it, guys. Add 20,000. Add 20,000. Hope you guys are clear. Next, let me take the next item. One, expenses. Pure financial income I have taken now. Now let me take pure financial expenses. Hope you guys are getting it. Next, two, financial expenses. Pure financial expenses recorded only in financial books. Okay, sir. Let me take it as 60,000. Let me take it as 60,000. Okay, now, sir, have we recorded this in the costing books? No, we have not recorded because it is a pure financial item. Because of this, my financial profit has gone down by how much, guys? 60,000. My financial profit has gone down by 60,000. Now you can analyze like this. Financial profit has gone down, whereas my costing profit is constant. It is constant because we are not at all recorded in the costing books. Is that clear? Yes. Now let us decide like this. Coming to reconciliation part. Sir, financial profit, costing profit. Because of this individual item, my financial profit has come down by 60,000. Now, if my starting point is financial profit, if I have to match it with costing profit, what should I? It has already gone down. What should I do now? Add it up, guys. So, for this, we need to add 60,000. We need to add 60,000. Clear, huh? Clear, Allah? Yes. Next. Sir, what if my costing profit is a starting point? Guys, see, both you will not do for single question, but I am just explaining from both the end. Okay. Financial profit, costing profit. I have recorded this expenses only in financial books. So my financial profit has come down by 60,000. Now my costing profit is constant because we have not recorded it. My costing profit is the starting point. Any adjustment I can make it for costing profit. What will I do if I have to match it with financial profit? Bring it down. Bring it down. So to bring down, what should you do? Deduct. So deduct 60,000. Deduct 60,000. Hope you understood. So pure financial items we understood. Same way now. Sir, assume. Let me change. Okay. Now assume. Sir, there is a notional expenses which I have recorded only in costing books. How much is that? Let me take it as 30,000. Well, notional expenses recorded only in costing books, but we are not recorded in financial books. We are not recorded in financial books. Guys, because of this, my costing profit has gone down now. Yes, gone down by how much? 30,000. 30,000. Okay, so 30,000. Now, if I analyze, my costing profit has gone down, whereas financial profit has remained same. Remain same. Sure. Now, in reconciliation, what are we supposed to do? If my financial profit is a starting point, financial profit is this one. Sir, it is constant. Whereas my costing profit has come down by 30,000. My starting point is financial profit, which is constant because I have not recorded it. If I have to match it with costing profit, what should I do? Deduct it. Deduct it so that it will match. Oh, so 30,000. I am reducing. Put it in bracket. Even this you put it in bracket. Okay, now coming to costing profit. Sir, what if my costing profit is a starting point? So, guys, my costing profit has already gone down. Already gone down. My financial profit is same. My starting point is costing profit. Any adjustments I can make is for costing profit. If I have to match it with financial profit, what should I do? Add it. Add it up. 30,000. Sir, I have not done anything wrong, sir. Why are you adding? Only in reconciliation. We are not going and doing any adjustments in records. So 30,000. Add it up. So this I can put it in bracket. Clear? Yes. Now, same way. Same way. Normally, cost records, whatever revenue I will record it in financial books for sure. For sure. But still, let me give an example. Sir, 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 I have recorded one income only in costing books, sir. Because in costing we record only sales, which will definitely will record in financial books also. Okay, but still, let me give an example. Sir, in costing, I have recorded one income, sir. Assume how much? 10,000. 10,000, sir. 10,000. Because of this, my costing profit has gone up by how much, sir? 10,000. So because of this, my costing profit has gone up, whereas my financial profit is same, guys. Same. So what do I do, sir, in order to reconcile the profit? Come on. Let us first decide the starting point. Sir, my starting point is financial books, sir. So this is the income recorded only in costing books. So costing profit has already gone up, whereas my financial profit is same. My starting point is financial profit. Any adjustments I can make it for financial profit. If I have to match it with costing profit, what should I do? Add it. Add it up. So I have to add 10,000. I have to add 10,000. Next coming to here, costing. Sir, costing has already gone up, sir. Now my costing profit itself is a starting point. Any adjustments I can make it is for what? Costing profit. Now if I have to match it with financial profit, what should I do? Bring it down. Deduct. Deduct 10,000. Got it? Huh? Yes. These are the pure items which we will record only in one book but not the other. Not the other books. Are we done? No, we are not. What we are yet to learn, sir. There are few transactions which we will record in both the books, but at different value. But at different value. Now, how do we treat it, sir? How do we treat it? So, whatever is the difference, we need to find out. Because I would have charged excess in one books or start in another books. Clear? You find out that. You find out that, guys. Chalo, let me go further. I am clearing all these things. Okay, I'll just give the examples one by one. Pay attention. Sir, one expenses I have recorded in financial records. How much? 1 lakh. Whereas in cost books I have recorded 1.2 lakhs. 1.2 lakh. That means excess. My costing profit has come down excess by how much? 20,000. Correct? Excess it has come down by 20,000 because I have over recorded. Maybe I can call it as over observed. Over observed in cost. Clear? Yes. Now starting point. Financial profit. I'm not taking the number, but I will just explain. Okay. Now, because of this, my financial profit. Now, financial profit has come down only by 1 lakh. Whereas my costing profit has come down by 1 lakh 20,000. 20,000 extra. Now, my financial profit is a starting point. Any adjustments I can make for financial profit. Now, if I have to match it with costing profit, what should I do? Deduct 20. Not 120. Only 20. Hope you understood. So, deduct 20. Sir, what if it is a starting point is a costing profit? Now, if costing profit is a starting point, guys, then, sir, listen, financial profit has come down by 1 lakh, whereas costing profit has come down by 120. 20 extra come down. So, it is already down. Any adjustments I can make now is for costing profit. Lift it up. Lift it up by how much? Only 20 in order to match. Okay, so add 20, guys. Add 20. Got it done? Yes. Now, same way. Let me take a reverse scenario now. Reverse scenario. Now, sir, in expenses I have recorded. Okay, here I will done. Let me change this only. Sir, expenses I have recorded here 1 lakh, sir. Whereas here I have recorded only 90,000, sir. 10,000 less. So, because of this, my financial profit has come down by excess by how much? 10,000. 10,000 extra. Maybe under observed in costing. Under observed in costing books. Hope you guys are getting it. Okay. Now what do we do? So come to financial profit. Now we are starting with what? Financial profit. Financial profit has come down by 1 lakh. Whereas costing profit has come down only by 90. There is a difference of 10,000. So my financial profit has come down by 1 lakh. It has already gone down by excess 10,000. So any adjustment now I will make to which one by via? For which one will I make? Don't show my hand. Tell me what is that? Financial profit. Financial profit. So what should I do? Add 10,000. Add 10,000. Okay. Sir, what if my starting point is costing profit? Financial profit has come down by 1 lakh. Costing profit has come down only by 90,000. So it's already up to by 10,000. Now any adjustment I can make is for costing profit. So it is already up by 10,000. So what should I do? Pull it down. Pull it down. How much? 10,000. Deduct 10,000. Deduct 10,000. Clear? Yes. Oh, now let us move to the income part. Let us move to the income part. Huh. Guys, in financial records, pure financial income you already seen. I am not touching that. Now we are recording in both the books but different amount. Okay. Income. Assume a income is recorded here 2 lakh, Whereas in costing books, we have recorded it as 1.5 lakh. 1.5 lakh. Because of this, my financial profit has gone up by how much? 50,000 extra. Okay, now if my financial profit is a starting point, what do we do? Guys, my financial profit has gone up by how much? 2 lakh. 2 lakh. Okay, my financial profit has gone up by 2 lakh. Whereas my costing profit only by 1.5 lakh. There is a difference of 50,000? Yes, sir. Now my financial profit has already excess by 50. My starting point is financial profit. Any adjustment I can make is for financial profit. What will I do now? Deduct. Deduct. Got it? Yes, sir. So I will deduct 50,000. I will deduct 50,000 here. Okay, sir. Next one. Next one, coming to costing profit. Coming to costing profit. Now, sir, my financial profit has already gone up by excess 50. My costing profit is 50,000 below. Now, my starting point is costing profit. Any adjustment I can make is for costing profit. So, if I have to match it with financial profit, what should I do? Add it up. Add it up, friends. Okay, sir. So, add 50,000. Add 50,000. Okay, sir. The last item, guys. So let me check it as purple. Oh, sir, income I have recorded here 2 lakh only. Okay, there I have recorded 2 lakh. Let me change it here. Income 2 lakh. Here, income I have recorded it as 2.3 lakh. In costing books more. In costing books more. So because of this, my costing profit has gone up excess by how much, guys? 30,000. 30,000. What do we do with this? If financial profit, first of all, what is the adjustment? Sir, my financial profit has gone up by 2 lakh, whereas my costing profit has gone up by 2.3 lakh. 30,000 more. 30,000 more. Now we are in financial profit as a base. Any adjustment I can make it for financial profit. If I have to match it with costing profit, what should I do? Add it up. Add it up, guys. So I'm writing it here. 30,000, we will add it. Oh, now if I am starting with costing profit. Costing profit. Sir, financial profit has gone up by 2 lakh. Costing profit has gone up by 2.3 lakh. It is already above 30,000 excess. Now if I have to match it with financial profit, my costing profit is a base. Now any adjustment I will make is for costing profit. If I have to match it with financial profit, what should I do? Bring it down. That means deduct it so that it will match. So deduct 30,000. Deduct 30,000. Is that clear? So each and every adjustment I have tried to cover. I have not named them. I have just named them as expenses or income. So in the question they will name it. We will take it. Factory overhead, under observed, administrative overhead, over observed, that is recorded, this is not recorded. That and all we will take care. Clear? If you just understand the concept, any adjustment we can take care of. Clear? Should we mug up here what to add, what to deduct and all? No. Because especially see, if it is one, you can try to mug up. Okay, what to add, what to deduct. What if they ask another book? You will get confused. Or else you would have been taught also, give a reverse effect and that. You should not do anything blindly. If I ask you, why are you adding this? Why are you deducting it? You should be able to give the explanation. You should be able to give the explanation, guys. Hope you guys can analyze now. Okay. So each and every item, analyze the effect of that on the profit. Analyze the effect of that on the profit. So you will be able to decide whether to add it or deduct it, guys. Is that clear? Clear? Yes. So that means we are good to go for the problems. Ready ready for the problems? Okay. We'll take a break now. After the break, we will solve the questions, guys. Take a break.